All right, we're live. Hey guys, hey everybody, and welcome to another episode of our Let's Talk. And today we're going to be let's talking about Coinbase and trying to make some predictions about 2018 and what would be the coins, the main coins that would join this Coinbase platform. And but first, I really wanted to talk about what happened this week with not a total crash, but definitely a difficult moment for a lot of us who are holding altcoins and Bitcoin and Ethereum, because we saw a massive dip during the period of Wednesday and Thursday. And I really wanted to talk to you guys during that time, but I just couldn't go online. I was just stuck watching the prices literally every minute and just hodling. Gary, how was your impression of what was happening during Wednesday and Thursday?
Yeah, so of course, this has been a roller coaster week, and it started off, of course, positive end of the year. Everyone's kind of Christmas time frame and thinking about all of the millions that they're going to have in the future. And I think that that's one of the fear points when what's called a weak hand joins some investment that is rising as phenomenally as Bitcoin has, Ethereum have, all these other altcoins. And if you don't understand the technology behind a project, if you don't have an understanding of the leadership and their previous successes, or really the driver for why they're creating a project in the first place, then you would be considered a weak hand. And what that means is the first time that there's any tension or struggle to hold on to an asset, then of course you would let go. And I have to admit, it's a fear that takes over. You know, part of the euphoria of joining a rising value asset class like Bitcoin or cryptocurrencies is that you say, wow, you know, I have a fear of missing out. I've heard that in January it was this, and in June it was that, and oh my gosh, it is October, and I have been waiting all of this time to join somehow. I went through all the paperwork, I turned in all the documents, and now I'm on Coinbase. And when I joined Coinbase, it was 17,000 or 18,000. And you say, I'm going to make my first purchase. And then you see it tank. And if you haven't done the research to some degree of understanding what an asset class is, then you can be considered a weak hand, because the fear of what you're losing, you just put value into the system, and you suddenly, on a minute by minute basis, are checking the current value. When you're doing this,
And
you forget the reason for the purchase in the first place. You forget the reason for the investment, and you don't even maybe know about the project itself. So I had to, in some ways, convey this message to other people that are around me, that are either invested in other asset classes, and maybe they take some of that wealth or some of that value and they put it into cryptocurrency. They say, oh my gosh, I've heard so much about it. I've done well with real estate. I've done well with trading, other kinds of asset classes or something like that. And they approach me and they say, what should I do? Now, this is not investment advice. I'm not telling people that they should buy a house in Malibu. I'm not telling people that they should buy oil leases in Texas, because these are decisions a person has to make on their own, based on their own research, on their own understanding, and their own sensitivity and tolerance to risk. Because everything as an investment is some level of risk. If you're going to look at something that has a stable fiat return on your fiat investment, then it would be something like a bond. And you say, well, I hope my local electrical service doesn't go out for where I live, right? And everybody needs electricity. Hopefully I'll get a return on that investment into a electrical company, and I'll get 3%, 2% or 3% on my fiat money in return, right? So this would be considered a very stable kind of investment, but it still has risk to some small degree, because that municipality or that city, or maybe people give up electricity, right? Everybody just decides to live in a cave. So there's certain levels of risk with any investment, right? And so recently, especially with the soaring of whether it's Bitcoin or Ethereum or some other kind of crypto people might have heard in the news, they are asking me. They know that I'm involved in the space, and I have to hold strong to my own belief systems, but also tell people they have to have their own research decide their course of action, right? So obviously, when there's been a massive backlog of involvement, applications, regulation, rules, things like that, and this anticipation. If you see some of the statistics about exchanges that are overwhelmed, I've recently even got emails this morning about CEX, which is a different kind of exchange, having a 400% increase in 1 month as far as applications. And obviously, wow, if you don't have the staff on hand to handle that kind of volume surge, what are you to do? So you say, well, we want to serve our customer, we want to grow. Coinbase has gone through this same kind of surge, and this is partly because there is this media that positively or negatively affects a person's emotional investment into a project. And then it involves their capital investment into that project. So with these kinds of surges in interest, there is a backlog. And to some, the backlog has served well, because the price on some of these, the perceived price points for some of these coins has dropped 30%, 25, 30%, somewhere along those lines. And people say, oh my gosh, I almost bought, but now what should I do? It was 19,000, now it's 13,000. Did I just find myself in a happy spot that I can buy at a discount? Or do I have my fear of maybe it's going to drop down to 5,000, right? Yep. What am I about to do? So this is one of those moments, especially at the end of the year. We talk about things like New Year's resolutions. We talk about, what am I going to do in the coming year? This is a great timing, actually, at the end of the year, because really it needs to be an investment of your own time and your own understanding of a marketplace. So as 2018 comes around, some of the things that can help steel your nerves is knowledge. The more that you read, the more that you understand about an asset class, the more you understand about what is money, what is the difference between money and currency, what is the difference between the intrinsic value of something, right, that human beings are desiring versus the perceived value, right? So a Louis Vuitton purse may have a certain perceived value, but really at the end of the day, it's stitches and leather, right? Stitches and leather that hold something that you carry somewhere, right? So when you think about the value of something, you have to put I have to put my logic into this more than my emotion into this kind of thing. And so later we may cover a different episode where we talk about the fact that, Bitcoin crashed my Ferrari. I was supposed to have a Ferrari by now because of this investment that has been so amazing. However, if you involve yourself and then you have staked your claim and then you see it tank, you say, oh my God, I was supposed to have a Ferrari by this time, and now it's vaporized, right? So you have to have an understanding of the technology in order to involve yourself in the first place. And that's what this bloodbath really has revealed, is that yes, Bitcoin dropped 30%. But did you know it's dropped 30% 6 times in this past year? Since its inception, if you do some of the background and research, you find, wow, it's had huge drops, and it is a volatile class as it becomes more and more aware to the world. But it also has amazing technology and momentum, not just as far as the earliest of adopters of the infrastructure, but also of the institutional involvement. And some of these other examples we talked about in our previous conversation was about the CME and other topics. So yeah, it's part of these things that really fire up your emotion, even though you need to be very logical about why you're involved in an asset class in the first place. So that's kind of my take on this past few days. It's a battle of euphoria with depression.
Yeah, definitely. I wanted to pick up comments that you did. First of all, the speed at which those exchanges are starting to gain their users. So I recently found that Coinbase is actually connecting 50,000 new users every day. Like, a lot of people are going into crypto because of Coinbase. And in November, they actually made it to the top of the App Store in the section of top free apps. So a lot of people, got exposed to this new product, and they, with the media talking about Bitcoin almost every day and talking about cryptocurrencies almost every day, and with the Coinbase app being in the top charts, tremendous exposure goes to Bitcoin. And definitely Bitcoin is not the cryptocurrency that has the best tech right now. It's definitely is a cryptocurrency that has the most hard forks known to the mankind so far. Like, they are splitting almost every week right now. But the interesting thing is that Bitcoin, original Bitcoin, has such a strong legend that I don't believe that anything else will be able to overthrow it. Sure, technologically and even user base wise, convenient wise, anything wise, any other technology would be better than Bitcoin. Yet Bitcoin is so strong about the message that it conveys to the people that I believe it's impossible to kill, and it's impossible to overthrow. And I believe it's going to be the most valued digital currency asset class ever, even if we have more better technologies. But see, this is very interesting that you brought up that with cryptocurrencies, it is very important to understand the future of every currency that you're investing in. Because if you're investing in Bitcoin, you're investing in the trust and the legend behind Bitcoin and all of the hype that is generating around Bitcoin. If you're investing in Ethereum, you're trusting in Ethereum Foundation. You're trusting in Ethereum Enterprise Association. You're trusting in the ecosystem, in the community, in the leader, in the roadmap, and stuff like that. Bitcoin doesn't have any of that. It's just growing fast, and it's just it has a totally decentralized ledger, totally decentralized government. That's what I wanted to say. Like, there is nobody, really no team that is a Bitcoin team, no leader, nothing. And that's what makes Bitcoin so strong and so interesting to invest in. But yeah, definitely one of the points that I wanted to point out also happened during this week. This week was phenomenal, actually, by the amount of things that were happening. And we're going to talk more about those later. But Coinbase launching Bitcoin Cash, which brought so much attention to Bitcoin Cash, partly because of the poor execution of the onboarding of the Bitcoin Cash. And a lot of people are criticizing Coinbase for doing a poor job of announcing the Bitcoin Cash, for misleading the audience by first stating that they're not going to support Bitcoin Cash, and then suddenly saying that they will at some point, and then randomly out of nowhere just throwing it on the market. They did definitely a poor job, and I hope that they learn from this lesson, and next time they're planning to launch some kind of currency, they do a better job preparing people about it, and they definitely do a better job on making sure that they able to handle the amount of demand that comes with this massive digital currency exchange, super popular in the US. Number one, I would say, they have to make sure that they understand the volume that is going to come after they're going to put some coin on there. With that being said, I wanted to transition into kind of like speculative discussion about what coins they might announce in the near future. And one of my predictions, and I'm sure that Gary shares the same vision, was Ripple. Ripple is this cryptocurrency that is total opposite of Bitcoin, a cryptocurrency that is centralized, that is not permissionless, but enforces permission, and essentially cryptocurrencies that many people see as the substitution or evolution of the SWIFT system, the system that was created specifically for the banks to adopt the blockchain and into their exchanging process. So it finally becomes cheaper to send money between banks in different countries. Ripple is doing a lot of innovations recently, and they're definitely adding a lot of very interesting team members to their board. One of their recent additions was Benjamin Losky. Gary, could you tell a little bit about us a little bit about Ripple and joining of Benjamin Losky to the board of directors on Ripple?
Sure, I can comment a little bit about Ripple. Actually, during this surging of the past week or so, I was involved heavily with Ripple and back out again in Ripple because in this past week, this past few days, it did surge above $1 per Ripple coin. And this has been a landmark point, really, for the value consideration of Ripple for many years. Ripple is not a brand new cryptocurrency. It actually has been around for many years in development. And
5 years anniversary just hit a couple of days ago.
Yeah, so it's had an anniversary point, which is again, when you think about the development of a computer, if you buy a brand new computer, how long is that current and contemporary? And it definitely can become antiquated quickly, and even quicker inside the crypto space. You can have something that develops, rises, and falls. And so to last for 5 years shows stability in the project, stability in the leadership and the value consideration. And just in this past few days, as Bitcoin tanking and dropping its percentage as far as value consideration, the same thing with Ethereum and others, Ripple actually had a surge. And part of that might have been that people are moving money from one position into another. But the other consideration about Ripple is that the cost and expense and the stability of a coin when it comes to commercial utilization. So an example would be Amazon or some kind of eBay payments or something along those lines. If you're going to sell a product to an end buyer, a consumer of your product, you need to be compensated quickly. You can't have a long delay, and you need to be able to have a reasonable stability to what you're paid in, right? So if I'm paid in a Ripple coin and it drops 30%, then I have a loss for the product I just sold to someone, right? So you need to have a more stable point. And that's one reason that Ripple for a long time has languished in some ways about its price per coin. This is because it has billions upon billions of tokens. And recently, I think it locked up or it froze 55 billion of its tokens, something along those lines, and it will release those as the market demand, as it becomes adopted more by commercial entities like an Amazon. If an Amazon is going to accept something, it right now is accepting dollar. There's other ways you can compensate, but Overstock is an example of a company that started using Bitcoin years and years ago. And if Amazon wants to overtake other competitors in the market space, it will have to become involved in a cryptocurrency of some sort in the near future. So something like a Bitcoin may be too expensive of a transaction to actually receive that income.
I would say.
Say again?
Even Bitcoin is too anonymous, I would say, for Amazon to officially.
Yeah, so the anonymity factor is definitely interesting for some investors and utilizers of different types of cryptocurrencies. And it doesn't necessarily have to be a Silk Road explanation. It doesn't have to be a criminal reason. There's all sorts of reasons that people want to have the freedom of where they put their money and where they take it away from, right? So if your stranglehold on accessing the banking system has to do with your citizenship. Just as a really quick side note, there are millions upon millions of people inside the United States that are restricted from utilizing the banking system in any way. This is because they don't have a social security number, they don't have an ITIN, they don't have a way to utilize something that is relatively stable, like a Wells Fargo or Chase bank account. So they might get paid in a dollar, but then they have to carry their dollar around with them or dig a hole in the backyard. What kind of security does that offer to the immigrant that's going through all of their processes of naturalization, right, of immigration? Because this is a long period of time where you may be inside the channel of citizenship, but it takes processing time. And during that processing time, basically you're a cash carrying person that doesn't have security other than your own ability to hide your weekly pay or something like that. So I'm just commenting that it doesn't have to be a negative reason that you're utilizing something like a Ripple or like some other store of value or some other transaction ability to access a financial system. So Ripple is very interesting in the fact that it's perceived as more stable. It has, if I were to share, let me share a screen here. One moment. Let's go here. Can you see this screen?
Yep.
Are you able to see my screen?
Yeah, we see it.
Okay, see yourself and then see back. So can you see the our company on Ripple?
Yeah.
Okay, so again, this is part of the leadership. If you did a little bit of investigation, you would see obviously that it's been around more than 5 years. You can do a lot of background about Brad and Marcus and the leadership of the company of the project. And one of the big things to comment about, I think that Kirill may comment later also, is, like you said, this addition of a new board member. Now, if anybody has watched any kind of Netflix documentary or any other kinds of background films about the development of Bitcoin, then you would find that this name is familiar. Benjamin Lawsky, how you pronounce it, was part of the New York government infrastructure to when Bitcoin was first being developed and first being traded and trying to become involved in the financial systems. It was a new animal in the environment, and one of those government regulators that was involved with the process of Bitcoin becoming available to the public, and really cautious about that, is Benjamin Lawsky. So this is one of the things that we'll comment a little bit more about in a few minutes, that initially representing the government and initially restricting the development of Bitcoin in connection with how public it, and whether it could be an anonymous transaction versus a public transaction. This is one of those gateway or restrictions to the development of Bitcoin early on. And then later, after Bitcoin becomes a little bit more normalized and available in the marketplace, Benjamin exited government service and became opened his own law practice to help Bitcoin exchanges navigate the financial rules, right, of know your customer and all of the other regulations required. And this is one of the reasons why a company or a project like Ripple has interest, is because it is one, not necessarily a anonymous transaction as much as it is a fast and stable transaction of value, for something like an Amazon product.
Yeah, so definitely like a big thing about Ripple is its connection to the banks. And so adding on board regulators or people who have been involved in the lawmaking for the cryptocurrencies is a huge step forward. So I see adding up of Benjamin as a very strong expression, as an expression of a strong will of Ripple to become more and more legal and to enter the financial sphere from the point of view of banks. And also during the last week, we've seen Ripple discussions about adopting Ripple being held heavily in the Korea and Japan. So they're working on starting to connecting their banking systems through the Ripple. And yeah, like a lot of like banking innovation is happening in the Ripple. And since Coinbase is going the same direction, very similar direction as Ripple in terms of connecting the institutional money, connecting the institutional interest and uh, uh, people and entities, right, to their ecosystem. Um, it definitely makes it very possible that Ripple is going to join the Coinbase. I see it definitely as a very probable addition. And since Ripple is in the top 10, if you go to CoinMarketCap, you can see Ripple as top 10 cryptocurrencies that currently could be traded. It makes it very possible. And it costs about $1 right now. So for everybody who is, joining such a platform as Coinbase, they would see the price difference. You could buy Litecoin for 300, you could buy Ethereum for 700, you could buy Bitcoin Cash for 3,000, you could buy Bitcoin for 30, 14, 15, 20,000 even, and then you can buy Ripple for $1. Like definitely that's something very interesting to invest in, because you kind of start to trust Coinbase to be your guide. And for a lot of people who are fairly new to the system and are yet oblivious to the rules and to the history of cryptocurrencies, it might be a very interesting choice to make.
Yeah, this I do have it up on screen. I don't know if you're able to see the same screen.
Number 4.
Yeah, so this is talking about coin market cap, and like you just commented that Bitcoin, Ethereum, Bitcoin Cash, and number 4 being Ripple. This is actually overtaking Litecoin this morning. So it's very interesting as far as its market cap valuation, and like I had commented earlier, even earlier in the day it was as low as 90 cents, but it surges back and forth between over $1. So that, as a perception in the marketplace that it might be a actual currency versus a store of value kind of coin. When you're talking about Bitcoin, you're talking about a store of value, because really to move $100,000 from one place to another, you might say, well, the transaction time is faster than a wire, a bank wire. It is faster than some other ways of moving that kind of high level value, maybe millions of dollars through Bitcoin. And then the cost, when you're talking about a percentage of what is being moved, is not as big of a deal. If you're to buy a house and you're going to pay for that, you would of course have closing costs, and you have thousands upon thousands of dollars in order to transact that deal. Same thing with any other kind of asset class, like a gold or silver. You're going to have a fee for actual transportation, delivery of that asset. So when you're looking at something like Bitcoin, then that might be a store of value consideration. You might say it's going to rise in value over time as an asset class, but you're not as concerned with large transactions like that. As far as how long it takes, 4 or 5 hours is faster than most wires. A wire may take 2 or 3 days. Same sort of thing with the cost of doing a wire versus a normal banking system and a transaction through Bitcoin. Now, when it comes to a Ripple or something along those lines, this is closer to being a currency. Closer. It's not perfect, but it's closer. And when it's closer, then it becomes something interesting to a wholesaler or a retailer or someone that has tangible assets and goods or services that they are selling to the public at market cost, market value. So that's why I think that Ripple has risen. I think that's one reason why potentially Ripple would be added to Coinbase as a option to as far as to purchase. And also the other things we commented maybe a little bit about in a previous episode is the proximity of the leadership of the project being in San Francisco across the street from Coinbase. So
both are in San Francisco, literally Ripple and Coinbase. I think they're in the same building, right?
Yeah, literally neighbors. I mean, they would be going to lunch. They would come down from their building and go to lunch at the same places. So it's not that it's absolute nepotism, but when you're dealing inside of the financial center of San Francisco and you've been there for many years, which Ripple has, again, more than 5 years of history. Bitcoin and Coinbase having more, I think, 6 years of history. So they basically have grown up inside the industry side by side with each other.
And so it's also 5 years. They've established in 2012 the Coinbase. So they're about the same time. They're literally started almost the same time.
Yeah. So again, this is one of those things that is an educated guess about which coin would be added to Coinbase next.
Yeah. So another thing we've seen just on the coin market cap, the two projects that are very similar, that are connected, Cardano and IOTA. We know that Cardano is being developed by IOHK, but also in collaboration with some hackers, some people from IOTA. So the two projects are very connected. They're not connected in terms of what they're doing, but they're connected in terms of teams. So those two projects, I often think of them together. They're kind of like a pair. I think that they might join the Coinbase, but again, they're still considered as altcoins, and I feel like Coinbase would first, target the coins that are sure thing coins, that are not, that are above, basically going above the altcoin scene. And Cardano and IOTA are still very experimentative, and they're definitely social experiments and financial experiments, and they're proposing very new things. And a lot of people criticize IOTA for not having a real prototype. Basically, they have an idea about their Tangle, but they don't have that Tangle yet in place, right? So we cannot really talk about adding of this currency because it doesn't have real tech. It doesn't have kind of real use case yet in there. Same goes to Cardano. It does have use cases. It does have people working on it, but so far it's too geeky, I think, for Coinbase to accept. On the other hand, the next one after them was Dash. And Dash is definitely a project that's been there for a while, previously known as Xcoin, previously known as Dark Coin, recently made an update, recently made like a new branding strategy. Now they're called Dash Coin, from Digital Cash Coin, right? And they're definitely surging. I remember when I saw them, they've been like $50, and right now they're almost, I don't know what they're now, I haven't seen, but they've been at some point at 1,200, and it's definitely something that can join Coinbase. Yet they have the instant transfer, they have the private transfer, and I think the private transfer is what going to be restricting them, really restricting them from entering the coin base, although being super fast. Like they have this instant transfer feature that is just brilliantly realized, and I think like a lot of, I would suggest a lot of other blockchains to implement it as well, because it's a huge problem for every cryptocurrency to achieve this level of instantaneously. Yet this anonymity, I think, is what's going to be holding them back from joining the Coinbase on-ramp. But I think they're going to do good without it too. They've been growing pretty fast. It's just, if they would get this boost, it would be better. But I don't know. What do you think about Dash? Is it possible that they're ever going to join the Coinbase, Gary?
So my comment about Coinbase, a couple of things about Coinbase. Obviously, we have seen this past week bad leadership decisions, or maybe bad vetting of employees, who knows, in how Coinbase involved Bitcoin Cash. Yeah. I got an email or a notice, and moments later, Bitcoin Cash was available on Coinbase and instantly crashed the system. Not just the platform of exchange, but when people first were, I think there were prices as high as $9,500 for Bitcoin Cash.
8,000.
Yeah, I did a screenshot, at least as far as what it was presenting at the peak of what I could see, and it was locked at a certain dollar point as far before it basically went offline. Now, earlier in that 24 hours prior, most of the rumblings in the marketplace, of course, when there's a fork, then you may have your original and you will have the same amount of the fork. So a lot of people that were holding Bitcoin had a similar amount in Bitcoin Cash that was going to be released to them. And often when these things happen, it's a cash grab because people will sell this lower value item into the marketplace to receive the cash. This is one of the examples of Gresham's law. Gresham's law talks about your fiat silver coin that has a dollar or has a value printed on it, and the intrinsic value of the material itself may be a different value in the marketplace because the metal of silver or the metal of gold may have a different value than what is printed by the government. So a $20 gold piece from the 1800s in the United States is worth a lot more than $20, right, in US currency. So it's worth a lot more because you can trade the metal for that. And the same thing with silver. Silver coins pre-1964 in the United States have a higher value than what is printed on them. So you may have a silver dime or a silver quarter or $50, and what is printed in fiat is a currency value in that government system, and what is the value of the metal itself would have a different value, right? Because you can sell that into the marketplace for its intrinsic value. Now, this is what happens with some of these forks. Bitcoin Cash is a fork of Bitcoin. And so when Gresham's law and human nature comes into play, people will say, is this more valuable to hold, or is this more easily to trade away? So if I had two dimes in my hand and one was silver and one was not, one is base metal, then I would probably hold on to the one that I considered more valuable, and I would probably pay my bills or pay for things with my fiat version, right? My lower base valued version of the same coin. This is what happens with Bitcoin versus Bitcoin Cash. And so as we saw the rise, unnatural rise, really, it's suspicious, unnatural rise of Bitcoin Cash for the 24 hours prior, and then the release onto Coinbase, and you see this huge surge in value, not drop in value of Bitcoin Cash because of this. It is one of those things they're definitely going to have to make investigations. They're definitely going to have to see, because again, this is an unregulated realm. And if this was a stock on the NYSE, New York Stock Exchange, and you saw a surge before, you would say this has to be insider trading. This has to be something that is unnatural when it comes to these human tendencies of Gresham's law and things like that, right? So Coinbase will still be an on-ramp, but it puts them also in a precarious position, because if you're going to bring the US public into the biggest exchange for cryptocurrencies, and you're going to bring another coin into that, now there's 4 coins, and you're going to bring number 5 and number 6 on, they definitely have to look at their internal protocols and their internal penalties for insider trading, right? So certainly people inside of Bitcoin, inside of Coinbase, other than the top 3 or 4 and the leadership, knew that Bitcoin Cash was next to be on the coin, and they knew that there would be a rise. So until they have some kind of this is one of those things that's going to say government has to be involved in some way to give stability to the financial sector, because other you want to have this utopian ability to exchange value for value and have smart contracts and some of the other things that come along with some of these amazing technologies of involving blockchain. But there also has to be some sense of law, and inside of a company that is as huge as Coinbase, the way that they executed the release of Bitcoin Cash has to be remedied, rectified, and publicized how they're going to deal with the next coin release before the next coin is chosen, right? So they do look at liquidity, they do look at utility, they do look at the technology behind any coin project that would be involved. And I think that in some ways, Bitcoin Cash has to be that example. Whether it suffers or whether it booms as a coin is yet to be determined. But when it comes to the next actual institutional and transactional coin to be brought onto the platform, these things have to be publicized. This is a company that has investors. It is that is outside of the crypto space. It has leadership outside of the crypto space, and not just their personal reputation, but the actual penalty of law for the benefit and penalty, the stability of law, and the penalty from this kind of Wild West behavior has to be addressed. It just has to be.
Which actually brings us to the last coin that I really wanted to discuss, if it's going to be on Coinbase or not, is kind of following the logic of Bitcoin, Bitcoin Cash, Ethereum, Ethereum Classic. So there's been a lot of discussion in the community right now that Ethereum Classic is doing some innovation. They changed their monetary supply to being fixed. They're doing some technical advancement. They have IOHK team on board, by the way, helping them introduce all of those technical innovations that they're planning to release in January, which makes a lot of people think that it might be a next thing on Coinbase, because having an alternative to Bitcoin, it might be reasonable to imagine that people might be interested in the alternative to Ethereum, Ethereum Classic. Now, what do you think, Gary? What do you think about Ethereum Classic, and if it's going to be joining Coinbase in any near-time future, or it's just going to be dead?
Yeah, I'm going to share this screen, and it is about Ethereum Classic versus Bitcoin Cash. And there's a couple of comments I want to make about that. Is the more the novice and beginner in the crypto space, the beginning investor in the crypto space, the onboard may be the easiest may be to go through Coinbase, right? That's one reason why they had such a massive surge in applications and all of the vetting that they have to do in order to know your customer and to allow you to basically send money from your banking account into their system, right? So there is a huge learning curve that the newbie has to put in there into understanding what they're actually buying, what their risk tolerance may be, and what their potential benefit may be of participating in either Bitcoin markets, Ethereum markets, examples like Ripple or Dash or other ones we've commented about. And one of those things that in some ways I think dilutes that understanding and challenges that understanding is the name, right? There was an example recently, I could show a screen of it, that if you add Bitcoin to the name of your product, your stock value rises 3 to 4 times, right? This is ridiculous. There's an iced tea company that sells iced tea, and
the long blockchain.
What?
The long blockchain. They renamed to Long Blockchain.
Yeah. So the name of their company was Long Island Iced Tea or something along those lines, but they renamed their company Long Blockchain. And so because they add that name to it, then the stock surges. This is reminiscent of the .com bubble in some ways, because all you had to do to add value to your stock was to add .com back when .com was a new thing in the 90s, right? So you may have a hardware store .com, or you may have a pet store .com. And by doing one of these things, you're not really necessarily bringing value to your service or to your product and releasing it to the public. You're actually just a brand. It's just marketing, it's just branding, right? So this is one of those things that I think can, take the enthusiasm out of the masses involving, is because they don't necessarily know the difference between Ethereum Classic and Ethereum. or between Bitcoin Cash, Bitcoin Silver, Bitcoin Gold, Bitcoin Platinum, Bitcoin Uranium, and Bitcoin, right? So the dilution of the brand name, the perceived value of the original, right? This is also one of the reasons I learned so much about silver, gold, these sorts of things like that. Is the perceived value versus the intrinsic value of a project or of a crypto is something to sort out through your own knowledge and research. Developing your own knowledge base and your research. So I think that, like you just said, ETC, the naming is one thing. It may have a surge because people just buy the name versus the service or the project. And so Ethereum tokens, these are interesting. Augur, Golem. We're going to talk about Civic and storage in a few moments. But that's one of the things I wanted to comment about, is that as you have dilution of the name by having 3 types of Bitcoin, 3 types of Ethereum, I'm not as positive about them being on the platform, Coinbase platform.
So yeah, so just wanted to quickly comment that the text that you're showing, I took this excerpt from ethereumprice.org. I encourage you guys to visit this website. Really interesting predictions on Bitcoin, and they recently have this article about crypto predictions for 2018. So yeah, definitely what Gary was showing about the Ethereum Classic and about the Ethereum tokens, that ethereumprice.org is suggesting that they would enter the Coinbase is interesting. So I encourage you to read this article. I'll place the link for this article in the description to this video. That basically inspired us to do this talk. But yeah, Augur that you mentioned, let's quickly go through the Ethereum tokens that might enter this space, because I think it's interesting. Right now, they cannot really join the space, the Coinbase space, because they're Ethereum tokens, and Ethereum has lots of problems with supporting their dApps right now, being largely being the amount of transactions that they can hold per second and the speed of transaction. So Augur is this prediction market platform where basically you can create your prediction markets. Anybody can create their prediction markets and exchange value based on if you're making right or wrong predictions in any kind of industry. So it could go from any consumer industry to any professional industry. It's just basically a marketplace for prediction markets based on the Ethereum blockchain platform. Then Golem is this startup that wants to build supercomputers on top of blockchain. So similar to storage, similar to Filecoin, anybody who is willing to participate with their unused hardware capacity can join the system and land their hardware to be in part of the supercomputer. And essentially, Golem will be able to build what they're saying they're going to build. It's going to be a startup that is able to build massive supercomputers, 100% decentralized. So essentially, no nuclear bomb is able to destroy this supercomputer because it's decentralized around the world. Obviously, right now, it sounds like a futuristic technology, but it's something definitely to look into. Now, Civic and Storage are interesting. Storage is essentially being an Airbnb plus Dropbox plus blockchain hybrid. And I encourage you guys to take your research into this kind of technology. There are a couple of people involved with this market right now, namely Storage and Filecoin being the biggest. And Civic is very interesting because it's a startup that essentially I think we covered Civic in the previous episode, so you can watch us talking about it more in the EOS discussion. But Civic tokens could be used for KYC research, and essentially it makes it Civic ecosystem makes it cheaper to do KYC, and it makes it possible for any user to have their digital identity that could be shared between various platforms where you need to use it. So instead of logging in using your login password, you'd be able to log in using your Civic identity card, and they are planning to expand it to buying tickets, to registering, checking in while using planes, and stuff like that. So those are tokens that are potentially might be interested through the Coinbase, but in my honest opinion, are very, very early, same as Cardano, same as IOTA, on the very, very early stages, and it's really too early to talk about them right now joining the Coinbase. I feel like Coinbase will focus right now more on the very, very solid, kind of like sure choices, at least in the near future. So any conclusions or comments from you, Gary? I think it's time to wrap up, but I just want to give you the conclusion word before we click this stop button.
Yeah. So again, research and knowledge will help to steel your nerves as this 2017 ends out. One of the things that I have seen over and over is, oh my gosh, I lost, right? And you only actually lose any asset when you sell that asset, when you rid yourself of that asset, because hindsight is always 20/20. You can always see more clearly what happened in your past and what you should have done versus what you do in the moment. And maybe buying a piece of real estate would have been a great decision, and then you may see that it rises 20-30%, and then you say, I'm going to cash out and sell. A year goes by and you find out that McDonald's bought that land for 3 or 4 or 5 times what you got paid for it. The same thing with some kind of utility of the land itself, right? So you can always hindsight say, wow, I just should have held onto that asset a little bit longer and I could have had this big boom. Same thing with calamity. You can make an investment decision based on emotion. You say, this is the most beautiful place in the world. I want to live here forever, and I will own it, and these sorts of things. But then you may not anticipate global warming and that it's going to be underwater in 3 years, right? So these types of understanding the marketplace, understanding your risk tolerance, understanding your investment mentality of your time, your capital, your resources, your social clout. This is where you can spend most of your energy. This is where you should put your energy, is to understanding the marketplace, understanding what is available, understanding the risk, understanding the possible outcomes that may be very fortunate. So again, as the end of the year comes around, you kind of reflect and you say, what happened in the past year and how can I make it better in the coming year to come? So that's just my comments at the close. And I hope everyone enjoys 2017, the last few days of it. And we will see you back here again soon.
Happy Christmas, everyone. And in the next discussion, I think we're going to be talking about how Bitcoin crushed my Ferrari. It sounds like a cool headline. And let's talk about this. Let's talk about the fact, is Bitcoin really going to make you rich? Or, is there another scenario to your investment? Thank you, everyone. And I'll see you in the next episode. Thanks for watching. Love you guys. Bye.
Ciao.